Good morning, guys. Hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's Tuesday, and after 4 straight days of rally, markets did take a pause yesterday. But we hope that bulls does make a comeback today, given that the trends in the GIFT Nifty are pointing out to a very positive start for the Indian markets. Well, the global cues definitely remain supportive. We did see overnight that the US markets have ended higher. S&P 500, NASDAQ, both of these indices have notched new record highs. And this came on the back of Canada walking back on its digital services tax on US tech firms, which actually was well appreciated by the US markets in yesterday's trading session also. If you look at the Asia Pacific markets, that also started on a mixed note as investors assess the tariff negotiations with the US. But coming to the US-India trade deal, we saw White House did say that the deal will be announced soon as they are finalizing the essential contours of the agreement. So the July 9 deadline is nearing, and an expiry of this trade deal would mean an additional 26% tariffs on India. So we'll keep a close eye on all of these developments as well. Apart from that, we have good news coming in from crude prices, which remain below the $70 per barrel, and US dollar index that is near 4-year low as Trump's passage of Big Beautiful Bill has raised deficit concerns in the US. Apart from that, if we see US Treasury yields, that is also quite well behaved in the overnight trading session. So all in all, the cues remain quite in favor for India. That is something that we could watch out in today's trading session, and we hope that the bulls do make a comeback despite yesterday's little bit of a pause that we saw. Now, in coming to today's trading session, we'll watch out for some individual stocks too. Apollo Hospitals announcing reorganization overhaul, and then we have Irida, which came out with its Q1 update yesterday. So all of these stocks will be taking into our radar as well. We'll also be taking your stock related queries, so keep posting them on our live feed and we'll take them up shortly. And before we delve deeper into the show, let's quickly take a look at the top headlines. Sir. Stocks in the Wall Street closed in the positive territory. The S&P 500 and NASDAQ composite notched a new record high. Asia markets were mixed this morning as traders assessed Trump's tariffs, and the GIFT Nifty was indicating a marginally higher start for our own markets. Crude oil prices edged lower as investors weigh easing Middle East risks and possible OPEC Plus output rise in July. Meanwhile, gold edges higher, supported by a weaker dollar. The trade negotiations between US and India are at sensitive stage as government sources indicate that if talks fail, 26% additional tariffs on India is imminent, and White House says that the President Donald Trump and Commerce Secretary are finalizing trade agreements and that an announcement would be made soon. Auto sales numbers for the month of June will begin trickling today. Wholesale estimates indicate a similar trend as Vahan registration data. The two-wheeler category is expected to be the biggest outperformer, followed by the tractors. And Apollo Hospitals has approved a reorganization plan to spin off and list its omni-channel pharmacy and digital health business within 18 to 21 months in a newly listed entity called NewCo, aiming to create 25,000 crore rupees healthcare platform. All right, if you take a recap of how the markets fared yesterday, we did see that the Sensex and Nifty snapped its 4-day rally yesterday. And of course, that comes on the back of investors booking some profit in yesterday's trading session. And particularly for Nifty, that settled below that 25,550 mark. But the breadth of the market, that was fairly positive. As we saw that the broader markets continue to outperform the benchmark indices, we saw both the mid-cap and the small-cap indices, they were up for the 7th straight session. Coming to the sectoral indices, PSU banks that outperformed while private banks took a backseat and autos also did not fare well. Coming to today, however, we'll watch out for the auto sales data in today's trading session. Some of the updates will be trickling sooner or later also. Today, however, we have 3 major cues that we'll watch out for. First, any news like I was talking about the US-India tariff development as the deadline is nearing. So anything on that can act as a kicker for the markets going ahead. Secondly, we have 3 new listings today. Kalpataru, Ellenbarrie Industrial and Globe Civil Projects. All of these three will be listing today. We'll also have Raymond Realty, which also will be listing in today's trading session. Coming to all of these three IPOs, the Kalpataru's grey market premium was indicating a flat debut in the grey markets. However, the other two, Ellenbarrie and Globe Civil Projects, is showing a decent premium in the grey markets upon debut. So these are something that we'll also be watching out for. And tomorrow we also have the big HDB Financial Services listing. So keep your eyes on that too. And finally, we have the Sensex weekly contracts expiry today. So any volatility could be seen in today's trading session too. Coming to the fund flows data, FIIs yesterday were the net sellers. They sold stocks which was about nearly 800 crore rupees in the crash markets. And DIIs, they stood as buyers because they bought stocks which was worth about 3,300 rupees in the cash markets. Aggressive fall from the put call ratio because that fell to about 0.81 levels from 1.25 levels in the previous session. And one new stock has been added to the FNO ban, that is your RBL Bank, and that is the one new stock that has been added to the FNO ban list. Now, just a couple of minutes, just 5 minutes to go before we go to the open, but let's take a look at how the pre-open rates look like for the markets at this point of time. Sensex and Nifty, both of them are marginally higher in the pre-open session, but we'll watch out if we actually go ahead and get a positive start in today's trading session. But before we go on to that and understand how the markets are going to behave today, let's quickly get on board with the technical expert of the show. Joining me is Ajit Mishra, Senior Vice President Research of Religare Broking, joining us. Ajit, good morning. You know, we did see Nifty break below that 25,600 mark yesterday. Can we expect consolidation to continue, or the global cues could remain in favor for India?
Yeah, good morning, Lovisha. So, Lovisha, it's natural to see a bit of a consolidation after the move that we saw last week. Means it was 5 weeks of consolidation which was ended, and we are gradually inching towards the record highs now. There's a gap around 25,650 to 750 area, and that's the reason why we are seeing some bit of a profit taking and caution in the index. But broadly, we are anticipating that is just a pause, and consolidation, in case if it continues above, let's say 25,300, 200 levels, it's a good consolidation. And the opportunities, specifically if you see that in yesterday's trade also, when the markets were witnessing lackluster move, the broader indices were witnessing strong traction. So this is something that clearly shows that in case if this consolidation continues, the stock specific approach is something that one should maintain. But broadly, the tone is positive. One should continue to look for buying opportunity. When it comes to intraday, any dip towards 25,430 in the Nifty spot is the area where one can look to go long, with 25,300 as a stop loss and 650 as a target area.
Yeah, that's right. Stock pickers market, that is what we've been hearing in the past couple of months also, Ajit. Ajit, what about Bank Nifty? We saw some profit booking after record highs, but how does it look on the charts for the near term?
So that's right. In fact, see, banking has been a critical, part for this entire recovery or rally in the index. And interestingly, what we are observing is that, especially in the last leg of up move, the PSUs are showing, better strength and resilience in comparison to the private banking majors. So there we are seeing a mixed trend, but the PSU pack is holding strong. But banking as an index, we believe that any dip towards 57,000 area is again a zone where one can look to go long, because the overall tone is positive, and gradually we are anticipating the index to inch toward the trendline hurdle around 58,200 mark. So still we have decent upside from the current level. So with stop at 56,700, one can look to go long around 57,000 mark with 58,200 as a target area.
Okay. Let's talk about mid cap and small caps also, because they continued their upward trend for the 7th trading session. But the street is more concerned about the expensive valuations once again for the broader markets. Ajit, how do you view that space at this point of time?
So that is true. Means the concerns are there, and see, one needs to be cautious also, considering that the broader indices are also inching closer to the record highs. But the participation is restricted to the quality names. Yes, we are seeing some of these beaten down stocks also witnessing recovery. But again, since the market are slightly overheated in the broader indices, one should be slightly cautious and pick the stocks wisely.
All right. Right, the first rates that is coming on your screen, we are seeing a little bit flat open, but however flat in the green, that is where Nifty has opened at this point of time. 25,500 mark, that is where we have opened at. 25,550 is to be specific, that is where Nifty has opened up also. If you look at Sensex also, Sensex also opened with about 100 points gain. So that is coming in on the back of good US markets behavior that we saw in the overnight session also. Coming to some of the sectoral perspective, if you look at India Wix, yesterday we saw quite a big of jump with about 3% uptick. Today is also it's seeing a little bit of a mild jump with about 0.2% that is coming in for the India Wix at this point of time. Bank Nifty with about a mild gains with about 0.1%. Like we were talking about the mid cap and small cap indices, today also they are doing quite well. Small caps in particular with about 0.2% gain, continuing and extending their upward trajectory for the 8th straight day also. But we'll watch out whether they hold out to the gains in the remainder of the session as well. Coming to some of the Nifty IT sector, Nifty IT flat in the green at this point of time. Yesterday autos were one of the top laggards, and today also it's not doing well. We have some auto sales data which will be trickling in soon, and we're expected that the tractors segment and of course the two-wheelers are expected to fare well compared to how the passenger vehicles are expected to behave. Apart from that, we can see Nifty Realty doing quite well with about 0.5% gains, metal index with about 0.2%, and Nifty FMCG with about 0.1% gain. So very, a little bit of sideways movement in the markets, but we'll watch out whether or not the breadth of the market improves in the later part of the trading session. Coming to the top gainers and losers on the Nifty, Apollo Hospital with a sharp gain of about 4% coming on the restructuring overhaul, where they also plan to spin off their pharmacy and digital health business, and they plan to list it within 18 to 21 months of time period. So Apollo Hospital is doing good on back of that news. Asian Paints also doing well with about 1.3% gains, given that the crude prices continue to remain steady at $67 per barrel. So we can see that Asian Paints has been appreciating that. Bharat Electronics with about 0.8% gain. We did see a new order book which has been announced by the company, so the stock is reacting well to that. Dr. Reddy's, HCL Tech also doing well in today's trading session. On the other hand, if you look on the way down on the Nifty 50, Bajaj Auto, one of the top losers, 0.6% cut that is coming in. Trent not doing well with about 0.5% cut. Yesterday, one of the top gainers, Trent was on the Nifty 50. Today, it's seeing a little bit of a profit booking on the other hand. Axis Bank, Titan and Bajaj Finserv, they also continue to be a part of the Nifty 50 losers list. But like we were talking about, Apollo Hospitals, one of the top gainers on the Nifty 50 with about 3.7% gains that is coming in. We did see that the board has approved the separate listing of its omni-channel pharmacy and digital health business within 18 to 21 months as a part of its broader reorganization overhaul to unlock value. So, for instance, they will be receiving for every 100 shares of Apollo Hospitals shareholders will be receiving 195 shares. So, 2 shares of the NewCo, 2 shares of the NewCo. So, NewCo is expected to be India's largest omni-channel pharmacy distribution and digital health company as well. Ajit, how do you view all of these developments coming in for Apollo Hospitals, and the stock has been reacting quite well also to these news?
That's true, Lovisha. In fact, if you see that of late we were seeing noticeable traction in the healthcare space across the hospital chains. So be it Apollo, Astral, DM, Max Financials, Max Healthcare. Now with this move, Apollo Hospital is again has reclaimed its record highs. It's in uncharted territory. And there were clear indication, means the stock was witnessing a very tight range consolidation for almost a month or two. And then we are seeing this move. So this indicates a possibility of continuation or the fresh uptrend in the stock. So one can look to accumulate the stock not to the current levels, but on any dip in the range of let's say 7,300, 7,400. Positionally for 7,000 as stop loss, and gradually it can inch towards 7,800 to 8,000 zone.
Okay, 8,000 zone is also opened up for Apollo Hospital, so keep an eye out on that particular counter. We have 2 auto sales data which has come out, that is your Escorts Kubota, where they have mentioned that the total sales are up by about 2.2% at 11,498 units. on a year-on-year basis, and also for Bajaj Auto, where the total sales are modestly up by about 1% on a year-on-year basis. Bajaj Auto not reacting well to this auto sales figures, one of the top losers on the Nifty 50, and however, Escorts Kubota is reacting quite well with about 1% gains. Any views on both of these counters, Ajit? Escorts Kubota and Bajaj Auto?
Right. So, Lovisha, in the rate sensitive pack, means post banking, we were seeing that auto stocks, especially M&M, TBS, they have done exceptionally well. And now we are seeing catch up move in these other names also. In fact, we were seeing a bit of a consolidation or a reversal pattern formation, Hero MotoCo, Bajaj Auto, Escorts also. So, but yes, since they are the second rankers as of now, so the move is going to be gradual. But for Escorts specifically, it looks comparatively stronger if we see the structure vis-a-vis Bajaj. And the stock has reclaimed its major averages, which is again a good sign. So broadly, it can gradually inch towards the 3600, 3650 area. So which is a decent upside, roughly around 300 points from the current levels. And 3240 is the support zone now. So with that as a stop loss, one can look to accumulate Escorts at current levels.
Okay, accumulate Escorts at the current levels. Let's take some viewer queries, which is dropping on our live feed also. The first viewer query that is coming in from Satya, he's asking the view on Mahanagar Gas for the short term. If you look at the 1 month charts, it's been quite stellar, Ajit. From 1300 odd levels, it did hit 1500. What is the next target that you can watch out for?
Right. So, in fact, the entire gas distribution name, we are seeing gradual recovery. And after this move around 1500, 1520 zone, we are seeing a bit of a profit taking consolidation. But the 1400, 1420 is the area basically where we have formed a strong base before this move. So that should act as a support in case if witnesses further correction. And in case if you have any existing position, that should be your stop loss. In the next swing, once we cross, let's say 1520 area, then 1620, 1650 is something the stock might attempt. So yes, you can look to accumulate the stock at current levels with 1420 as a stop loss and 1630 as a target area.
Okay, 1630 as a target area for Mahanagar Gas. He's also asking the view on marine electricals for the long fresh position. If you look at from the 3 months perspective, the stock has done well with about 29% to 30% gains that is coming in. Can we expect more upside going ahead?
So marine, I guess it has shifted to trade category, and yes, it's shifted to trade category. So that's why we are not seeing any major traction. So if the view is short term, I would recommend him to refrain for any fresh position. In case if you have an existing position, you may stay put. But the momentum is missing, and for any uptake, we need a close above 222. So once we see that, then probably we can see a fresh momentum towards 250. And in the interim, 200 should be your strict stop loss.
Okay, all right. Let's take one stock in focus, that is your IREDA, because it did come out with its Q1 business update. We did see that the loan sanction has grown by about 29% on a year-on-year basis, and the disbursements have increased by 31% on a year-on-year basis. However, Ajit, if you look at, it's a good business update. However, if you look at the stock in the first half of this year, it's already declined by about 25%. How do you expect it to react going ahead for the short term?
And in fact, if you see Lovisha on the longer period, it's been almost a year now that the stock has been experiencing correction. Means from 310 of its record highs to 130 area, and then gradually base formation. So basically, it's in a process to set the base for the next leg of the recovery. And we see that once the stock reclaims 180 area and closes decisively, at least for a session or two. So yes, possibilities are there that we can see this reversal unfolding in near future. So if you have existing position, you can definitely stay put. Now 155.57 is a base where we have multiple support. So with that as a stop loss, you can start accumulating. For those who are planning for any momentum trade, they should wait for a breakout above 180 mark.
Okay, breakout above 180 mark for IREDA. Let's go to another viewer query. Naveen is asking Vishal Mart entry levels for the short term. Vishal Mart, if you look at recently also had a promoter offload of the stake, and that reports have been suggesting that it could make the counter an essential candidate for the MSCI Global Indices review, which would take place in the month of August. But from a near term perspective, how do you see the counter going ahead, Ajit?
So near term looks sideways to me because there was an attempt of decisive recovery post the base formation around the major averages, but it couldn't sustain that move. And again, we are trading closer to the long-term moving averages. So this indicates a possibility of further consolidation. So if the view is short-term, you should refrain from any fresh position.
Okay, all right. Let's take another viewer query at this point of time. Naveen is also asking the view on Bank of Maharashtra. If you look at Bank of Maharashtra, very tepid charts coming in, very range-bound movement for Bank of Maharashtra. It did see a breakout in the month of May with about, it's breached above that 50-odd levels, but still remains quite sideways, Ajit. What do you expect? Do we expect this range-bound momentum to continue going ahead as well?
So probably yes, because 58 is a very strong hurdle, means the previous swing high, and if you see the breakdown zone of the previous consolidation range, so that coincides around that area. So once we take off this mark, then we can see a fresh momentum towards, let's say, 64, 65 area. Otherwise, it may remain under sideways tone with 54 as a near-term base. So if you have existing position, you can stay put with 55 as a stop loss, and once we, let's say, break 58, then probably you can wait for 64 as a position target.
Okay, all right. 64 is a positional target for Bank of Maharashtra. Let's take another viewer query at this point of time. Komal Makicha is asking the view on investing in Bharti Airtel at the current market price for the next 6 months. And she's asking what are the possible target and stop loss for the counter. Any views on the counter? We did see a good subscriber data that came in for the month of May.
So very consistent performer, Lovisha, in the telecom space, and with every consolidation, it usually ends up with trend continuation. After this strong up move from 1800 to this 2020 area, we may see some consolidation around the current area. So the good strategy would be to accumulate, not to go ahead with the lump sum buying at current levels. She can buy partially at current levels and add more in case if it sees any dip around 1950. For the entire position, 1800 is a very strong base, so that should be a stop loss. And positionally, 2450 to 2550, positionally in the next 3 to 6 months, that should be a target zone.
Okay, all right. Let's take another viewer query at this point of time. Debu K is asking the view on Amber Enterprises. Amber Enterprises, if you look at from the May highs, the stock is not doing well, but it has picked up pace in the recent months. Ajit, anything that we can watch out for the counter? Amber Enterprises?
Yeah, so it seems like consolidation is still on, and 7200 is a very strong resistance as of now, with the intermediate hurdle at around 7100 mark. The downside also seems capped, so with 6400, 6200 being the lower end. So until we break this mark of 72, 7400 decisively, this lackluster move might continue. So if the view is short term, one should refrain and wait for a breakout above 7400 mark for a decisive action.
Okay, all right. Let's take another viewer query at this point of time. Nitin Shaji is asking the view for TVS Motors, and he's asking what are the fresh new entry levels that he can watch out for TVS Motors. The stock has been doing quite well from the month of April lows itself, and from April lows itself the stock is up about 23% or so. Ajit, can we expect this momentum to sustain going ahead?
Yeah, it seems so, because Lovisha, we are set for the consolidation breakout, a major breakout almost after 8-9 months. The stock is almost at the record highs, so everything looks positive overall. At current levels also, you can consider going long. 2820, almost 100 points down from the current area, that should be stop loss. And positionally 3400 to 3500, that's the target zone. So the risk reward is favorable. He can continue to look for buying opportunity even at current levels.
Okay, buying opportunity at the current levels for TVS Motor. Let's move on to another viewer query then. Your Coromandel International Anil is asking the view on Coromandel International. If you look at so far this year, the stock has been quite well, 25% returns. How do you expect the near term to behave, the later part of the 6 months?
So it's slightly volatile in the last couple of trading sessions, but the trend is positive. The stock is at the record high, so everything looks positive. But since we are seeing this fresh volatility in the stock, one should be slightly cautious for the fresh positions. So let's say if you are okay with maintaining a strict stop at 2250, definitely you can consider going long at current levels. And once we break this 2550 area, then probably 2800 is something that the stock might test. The risk reward is favorable. You can look to go long, but with strict stop losses at 2250.
Okay, 2250 as a stop loss for the counter. Let's take another viewer query. K Naga is asking the view on graphite, and he's asking whether he should buy at the current market price. If you look at the stock, it's trading at about 577 levels, which is nearly to its high that it had achieved in the month of May as well. Ajit, any views on the counter? Is it favorable at the current market price for him to buy?
It's a high beta counter, Lovisha. So in case if you're okay with sharp moves, 8-10% in a single day or two, definitely you can consider going long, but not at the current levels. Since you have rightly mentioned that the May high is very close to the current area, means 590.93 zone basically where it tested the high and witnessed the profit taking. So wait for a breakout above 595 or a dip towards 550. Around that area, we have multiple supports that would help into cushion in case if there will be any further decline with 520 as a stop loss, or in case if we see breakout first above 595, then probably you can enter with 560 as a stop loss and 660 as a positional target.
Okay, 660 is a positional target for Graphite India. Let's take one stock in focus right now. Bharat Electronics, the stock is doing quite well, and the company did receive a fresh order which was worth about 528 crore rupees since its last disclosure on June 20. If you look at the month of May, it was a good run up for the stock, but since then the stock has been in consolidating. Ajit, are you still optimistic about the counter, about another leg of up move going ahead?
So in fact, it's outperforming within the space, defense space. Lovisha, means on every dip around the short-term averages, we are seeing buying interest emerging, and it reclaims the record high in no time. So this kind of outperformance clearly shows that momentum is intact. But again, one needs to be strict with the stop losses when you are chasing momentum. So now with 420 as a base, you can definitely go long. Upside is open. So from the risk reward point of view, 440, 445 is something that you can maintain as a target zone.
Okay, all right. Let's take another viewer query at this point of time. Alex is asking the view on Triveni turbines. Is asking if there's anything interesting that you're finding on the chart. Ajit, any thoughts on this?
So Triveni turbine, yes, it's trading in a very tight range with almost negligible volumes, and that too while holding above the major averages. So once, let's say, this stock surpasses 625, probably we can see a very strong directional move. But mind you that it had made multiple attempts, to cross that area, but it failed of late. So at least wait for this stock to sustain around that area, around the later half of the session. Also, let's say in case if it make an attempt in the first half, it should hold that area in the second half also to maintain this momentum, and then probably 700, 720 is something that the stock might test. So with stop at 580, one can look to accumulate Triveni or wait for a momentum breakout above 620.
Okay, all right, 620 breakout that we need to wait for Triveni turbines. All right, just one last question before we let you go, Ajit. Anything that you're finding interesting in this particular market? Anything that you want to enlist as your buying picks?
Yeah, so basically, Lovisha, we are seeing certain stocks like Device from the pharma basket, which is showing consistency in the trend. Means while the pharma stocks are trading lackluster, it's been maintaining a steady up move, and of late it's set for the breakout from the consolidation range and trading around the record highs as well. So we are eyeing roughly around 7180 in Device in the near future. With stop at 6600, one can accumulate at current levels. Then we have Indian Bank from the banking basket, which is again trading at the record highs, consistently maintaining its outperformance. So we expect 678 in the near future. With stop at 625, one can go long in Indian Bank also at current levels.
All right. With that, we have to let you go, Ajit. But thank you so much for your time, and we hope that we connect with you soon.
Certainly. Thank you.
All right. Right, let's take a quick check of the markets before we move on to our next guest of the show. We have Sensex, which is doing quite well with about nearly 200 points gain, and Nifty is also above that 25,550 mark. It's not above that 25,600 mark that we had reclaimed earlier, but still holding well at this point of time. Let's take a look at the broad end of the markets. Mid-cap and small-cap, both of them are still doing fairly well. And if you look at from a sectoral perspective, Auto index still in the red at this point of time. But let's quickly move on to our next guest of the show. We have Siddharth, Bothra, fund manager of equity of Ambit Asset Management, joining us. Siddharth, good morning. How are you reading the markets at the current juncture? We had Operation Sindoor, then we had ceasefire between Iran and Israel. Plenty of market events that the markets have rode on.
Hi, good morning. Thank you for having me here. So I think market has clearly been climbing the wall of worry, and most of these regional and global issues has not really impacted the markets as such. And our sense is that going forward, with a lot of these things now subsiding, some of these concerns subsiding, and possibly better second half ahead, because there's the monsoon effect plus the low base of the last half. So I think we continue to have a positive view on the market as such.
Okay. Siddharth, what about the US-India trade deal? It's out to be expected soon. July 9 is the deadline. How do you assess the impact of the markets, or how the markets are going to react given the trade deal? And of course, the agri-concessions was a major pain point between the two countries at this point of time. How do you expect the markets to react going ahead?
Well, I think if if at all these things come through, I think it should be sentimentally positive. And then we have to look into greater details as to which sector gets benefited and so on. So I think it's too early to kind of comment on it. But our general sense is, at least sentimentally, it should be fairly positive.
Okay. All right. Siddharth, we also have the earnings season, which will be starting soon. How are you positioning yourself ahead of it? Anything that you're liking ahead of the Q1 results? Anything that you're disliking? You want to spell out?
I think the major this thing, I think, will be more on the consumer side, because there's a sense that some of the tax benefits which recently came, plus decent monsoon, maybe the outlook on the consumer side should change. So not only the numbers, but also the commentary from the consumer companies on how they are looking at the second half, and the possible kind of if there's a recovery around that. So that would be one key sector that we would look out for, both on the discretionary side, even on the staple side. And other than that, I think the surprises could be limited, but little bit again on the capex side. So capex as well as the consumption theme, these would be the two things we would probably look out for.
Okay. All right. So that's the two main variables is, of course, the crude and the progress of the monsoon going ahead. How do you expect the demand from the perspective of urban versus rural at this point of time, since you mentioned that you are bullish on the consumer space going ahead?
Sorry, I missed your question.
No, so Siddharth, you mentioned that you're quite bullish on the consumer space going ahead, but how are you watching out the two main key variables, the crude prices and of course the progress of the monsoon at this point of time?
Yeah, so I think monsoon has kind of recovered a bit, and even on the crude side, things have now become stable. But more importantly, we have to look more from the demand side. And that looks like there's been recent even some of the companies have come out and said that whether it be Nestle or some of the larger ones, that they do expect demand to come back for the premium side and the overall. So increasingly our sense is that the consumption side, things could improve as we move ahead, irrespective of some volatility that we have seen on the crude side, and not so clear direction on the monsoon till now.
Okay, all right. Since you mentioned about the domestic oriented themes, I want to understand from an export oriented themes like IT and pharma. Of course, we did see Accenture's results earlier, but what would you suggest investors accumulate or stay right away from IT particularly?
So IT, I think we continue to remain a bit cautious. So I think we could possibly, we're not in a hurry to look at, accumulating on the IT companies as such. But I think pharma, looks attractive today. Not only the domestic ones, but as you rightly mentioned, even the some of the export focused or the US generic market focused ones. So pharma is something where we think there are good opportunities around. IT, we would be firstly very selective, and on a general basis, we would continue to be on a broad based basis, we continue to be cautious.
Okay, okay, all right. So that, right now everyone is talking about how the market is perfectly valued. But if you look at the broad end of the markets, mid cap and small caps, once again stealing the show. But do you believe that they have already turned expensive, or how are you watching out in earnings growth from this space going ahead?
Uh, our sense is that the mid cap and the small cap is expensive today, and while when you look at the period between say 22 to 24, while the both these segments were expensive even then, but at least the earnings growth was fairly strong during that phase. Going forward, we don't think there's going to be a major divergence between the large cap and the mid and small. And given the fact that valuation multiples for mid and small, particularly when you look at the broader market, is so stark, we think comparatively, that way large caps look a lot more attractive when you're talking on a very broad-based basis. Obviously, otherwise, investing is a very bottom-up aspect, but as such, we think both mid cap and small cap do look expensive, and you have to be really work hard to find select. As a stock picker, you can always find good bets even in these segments now. But as a category, I think both these segments look more expensive, and relatively large caps look more attractive.
Okay, okay. From an earnings growth perspective, however, for India Inc., are you still eyeing for a double-digit growth for FY26 compared to how mid to high single digits growth we saw in FY25?
Yeah, so I think a little bit of I think the earnings growth should be in the double-digit side. It could be aided by some of the segments where the base was low in 25 coming back. And while we think it's going to be more a muted kind of earnings growth even for 26, but our sense is still in the low double digits, like between 10-12% kind.
Okay, okay. So that everyone is chasing for the Nifty to reclaim its lifetime highs once again. But do you believe that that would also not be sustainable, given that the earnings growth is still something that we need to watch out for? And how are you estimating going ahead?
See, for Nifty, the key things, the key drivers would be the large cap companies, particularly on the BFSI side, which has a very large weight. So I would not be surprised that, say, if we take a 6 months or a 9 months view, that at least on an index level or the large cap Nifty level, we could be at a new high. Because within the larger Nifty, say the BFSI or some of the other space, like particularly BFSI, which is a very large chunk of the overall weight, valuations are still reasonable. And if we sense earnings recovery coming from the second half or the next year outlook looks positive, I think you could see surprises here. When I say BFSI, the entire the bank, the insurance, and so on. And other than that, I think otherwise also on the consumption side and all, I think valuations are at a phase where if earnings outlook or the near-term outlook looks improving in 26 and 27, we could possibly see new highs in Nifty is my sense. Not much, but the fact that we are not very far away from the new high also.
Okay, okay. Siddharth, I want to understand from a defense stock perspective, given that they really did well on the backdrop of the border tensions, and there were more order wins as well. So how are you placed on this particular theme, given the run-up that we saw in May? Do you believe that they are fundamentally right at this point of time?
So I think, as a segment, if you see defense certainly looks very attractive, not only, as you rightly mentioned, the geopolitical thing, the domestic aspects, which, makes the near term or the medium term outlook very positive. Even many of these defense stocks are now, increasingly getting their feet on the export side as well. So as a category, we think defense is looking interesting, though. from a positioning perspective, we just have one defense stock, which is more a derivative of would be a derivative beneficiary from defense. Largely because of the difficulty in understanding this sector, the valuations as such. But I think as an overall category, purely from a opportunity perspective, I think it looks very attractive as such.
Okay, all right. Just one last question before we let you go, Siddharth. Let's also talk about the quick commerce space now that Amazon has also announced its services in the name of Now after Rapido. Any long-term impact that you are seeing for the current players like Zomato or Swiggy?
So I think while there's been a lot of noise around the competition, I think for a segment like this, we think the incumbent players are really well entrenched, and they do have the first mover advantage. And inherently, for a e-com guy to come in here, in a way, it also opens up the broader market because what happens is quick commerce earlier was seen more for particular segments like maybe the grocery and so on. But once the larger e-com players also come in, maybe the category itself will expand a lot. And I think this segment is growing fast, and there is room for possibly 3-4 players. So while the noise here continues to be very high for on the competition side, we continue to have a very positive view on quick commerce and the incumbent players as such, and they also happen to be our co-holdings.
Okay, all right. With that, we have to let you go, Siddharth. But thank you so much for your time, and we hope that we connect with you soon.
Thank you so much for having us. Thank you.
All right, let's quickly check the markets at this point of time. Sensex still doing well with about 200 points gain, and Nifty above that 25,580 mark at this point of time. If we look at the advanced decline ratio, the breadth of the markets is definitely positive. 1892 shares have advanced against 1100 shares which have declined at this point of time. Nifty Auto Index, which was not doing well in the early trade, has flipped into the green. 0.3% gains coming in from the Nifty Auto Index. Nifty PSU Banks, however, yesterday one of the top sectoral outperformers, today has snapped the 5-day rally, and it is down about with 0.6%, which is nearly 0.5% cut coming in front of the Nifty PSU Bank. On the other hand, like we were talking about the Nifty IT Index, next week results will be coming out for all the IT bellwethers, and we can see a gain of about 0.4% gains. Nifty FMCG, however, very muted in this market with about flat in the green at this point of time. But yes, the broader end of the markets, mid cap and small caps, both of them continue to do well. However, they are marginally, very mildly and flatly in the green at this point of time. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks are in focus. Until then, signing off.